Hello traders, just want to share another trade with you real quick. This is a 15-minute chart of the Australian dollar US dollar pair, and this is another opportunity to trade with the trend. Before I get started with that, I did a counter trend trade here. This was on Friday, and I based this off of another entry that I used. I used a fib study. So for those of you who are unfamiliar with Fibonacci retracements, what I did was I did a fib study between the low here and the high here, and that low was 86.05, and this high here was somewhere around 87.25. So I did a retracement entry, and usually you'll get a good bounce and off a move. You'll retrace and then bounce off that 50% level. So it retraces about halfway to where it moved up, and then it'll bounce back up. So I got a good movement in that direction. But what I didn't do was secure profits in that direction. I didn't trail my stop as it was moving up. I could have trailed it here and then trailed it per each candle as it started moving up, and then taken some profit. But I didn't do that. I allowed it some breathing room, and when I allowed it breathing room, which means that I accounted for the volatility of going back and forth, it worked against me. And then not really losing much because it was break even was where I put my stop, but I didn't gain all I could have gained on that trade. The market overall, took over the direction of where price is going today. And let's take a look and see what I mean. I'm going to take you to the daily chart. If we look here, we're up high here, now we're down low. So this is a downtrending market overall on the daily. And if you look at today's price activity, it's a heavy sell-off today, and it's a great opportunity to get in and get short with this downtrending market. And we could potentially, we don't know, but it could potentially actually break these previous lows if we stay in it long enough, and we can gain some profit. I have my stop set down, or my profit target set down in here of that previous low that it hit before. Now let's go to the 30-minute chart real quick. Okay, if you can see here in the 30-minute chart, we're up high here, we're down low right now. So we're in a downtrending market. Not only that, we have a couple of moving averages that I use. I use 25 period and the 55 period to gauge what the market is doing. And I got a cross of this 21 period moving average below this 55 period moving average recently, which indicates to me that the trend is down here on this 30-minute chart as well. Let's go to the 15-minute chart. All right, so entry-wise, for those of you who are unfamiliar about how I do my entries, what I do is I try to line up these smaller time frame moving averages. I have a 5-period and an 8-period moving average on my chart here. And I try to line those up with what the overall market trend is doing. So I have this downtrend of the market indicated by a cross of this 21-period moving average below the 55-period. So I want to have that 5-period moving average below this 8-period moving average at the same time. So I had a good cross here, touched, and it crossed down low here. So I got a good entry signal to get in. Not only that, but I matched it up with the stochastic indicator. That also gives me an entry signal as well. So it came up and it crossed below bearish here. Didn't get all the way up to overbought, but it doesn't have to in a downtrend. But that's a good way to match up your entry signal, guys. I'm running out of time. Thanks for watching, guys. And take care.